Okay. Yeah, Motiversity. That's it. Yes, I consent. Hold on, I'm just trying to start this thing. Yeah, Motiversity. Yep. So I hope your guys' week was as awesome as mine was last week. It was an absolute game changer for myself, for my mindset. If you haven't, let's make sure that we start winning, not losing. That's what we're here for. Try to help you. Okay, so like last time, we're gonna do an open floor type of deal so that everyone can unmute themselves for the first section and just talk if they need to, and ask questions, whatever. It's gonna be a mindset discussion kind of thing. And then we're gonna go into insane setups last week. I know Peter made 60%. I personally made 8%, but that's because I was incredibly disciplined and careful. If I went a little bit crazier, I could definitely get a ton. And if I didn't miss gold, I would have probably flipped my account. So we'll talk about those setups. They need to, and okay, ask questions, whatever. Guys, mute yourself for if you're not talking now. Otherwise, we're gonna have problems. I'm trying to promote everyone to panelists, but this freaking software is buggy. Zoom is buggy, so it's not letting me. I've been trying. So if you want to talk, but you're not part of the panelists, just raise your hand and I can allow you to talk or whatever. Thanks, Ryan. So one thing I wanted to be more interactive with people and ask questions. So I'm going to start with, if I today picked one of you and said, you know what, I am feeling generous and I want to take out my 401k $1 million and just give it to one of you, would you accept it? Ryan, would you if I wanted to give you $1 million just because you're my friend?
No, man, I get my own money.
No, but I mean, there's a point to my story. You got to say yes.
Okay, yes, fine, I will.
Right. But if I change the story and say, what if I gave you $1 million, but you could never wake up again? You would probably.
I know the story. Okay, got it.
Yeah.
Yes.
You would
Well,
probably
no.
say, fuck no.
Honestly, no.
Fuck no. There's no amount of money that I can give you that you would say, hey, you can't wake up anymore. But here, take $1 million. Unless people sound so selfless that they are okay setting their family up, but in order to in exchange for their life or something. I don't know. So that's the thing. Like, that's what I wanted to start with. Why? Because you guys got to be grateful for what you got. Like, no matter what the fuck happens in your life, everyone has stories. I'm sure of it. Everyone comes from different countries, different whatever. By the way, do we have people that are new on the stream today? If you guys
type of one if you are.
Yeah, if you're new, type of one in the chat. If you're new on the stream. Right. So yeah, so wake up being grateful and understanding that especially trading is part of the freaking it's a process. You're not going to get rich tomorrow. I'm sorry. I'm not going to sugarcoat it, be like, hey, it's a great opportunity, but it takes a lot of work, a lot of freaking work. So if you're not ready to work, maybe Forex is not for you. Like, I am the person that's transparent. I'm not going to beat around the bush. If you're losing over and over and over again, and you're disciplined while you're doing it, that means you probably have a bad strategy. If you have a perfect strategy and you keep losing, that means you don't have control of your emotions. Which brings me to my second point, which is salute, by the way. Which brings me to my second point, which is the fact that I just watched a Shaolin Monk video. I don't know how I get like these suggestions. Amazing video. And I didn't finish watching it because I wanted to prepare for the stream. But he said something started is very, very good. He's like, if you have something that you like, and he takes the like one of those jewelry, what's it called? What do you call the thing that you put around your neck?
A necklace?
Yeah, necklace. Thank you. I got a brain fart. All right. So yeah, so he takes a necklace like this, right? Like a wooden necklace, and he says, there, if you have something good, stop pulling. And if you have something bad, stop pushing. And now it's like, what? That freaking doesn't make any sense. What does it mean? And he said, this is where it comes from. He takes the necklace, right? And he pulls it. He's like, if you have something good and you really like it, and he pulls it towards himself, it's like, it's just a matter of time when, and he releases it, and it swings away when it's going to go away. And at the same time, if you have something really bad and you push it away right away, you push push that away from yourself, guess what? When it snaps, it's going to hit you in the nose. So I didn't finish the video yet, but it made me think of a lot of things in Forex right away. Like, he talks about how there is no rich without the poor. You're only rich because you experience being poor, or you're from a poor family, or how someone who is like super poor, so that's why you're rich. Because life comes at you in waves like this, just like the market, ups and downs. So if you are, this is where I draw a parallel to the market. If you are fucking emotional when you win, you're going to be a wreck when you lose. If you don't follow a strategy, and I saw this, I didn't want to comment because I didn't want to aggravate anyone and hurt anyone's feelings, but I saw this in, exactly. You can talk if you need. Exactly. Universal load. But there is a way to handle it the right way and the wrong way. So what I mean is this. I saw a conversation between Peter and I can't remember who. And the person was showing a trade that worked out. But and I don't know the context, so I'm not going to say I know what's going on. I'm just going to keep it general. If you have a trading plan, and in your trading plan, it states that I'm not saying that's your trading plan, I'm just saying Monday, let's say you don't trade. In your trading plan, Monday, you don't trade on Monday. And then you take a trade on Monday, and it's successful. You already lost. Right there, you already lost. Because the point is not that it worked out for you. The point is that you deviated from your own plan. You can't hold yourself accountable to your own plan. It's only a matter of time till disaster, because you bend the truth just a little bit. Oh, maybe I'll put stop loss of 10 pips today, not 3 pips. Maybe I'll not put a stop loss. Maybe I'll, just put a smaller trade and not put a stop loss. You start deviating from the plan. You don't have a plan. It's like blackjack. If you have a plan, and I devised several strategies for blackjack in my life, if you don't have a plan and you deviate from your plan, even if you win at that particular moment, in the long term, it's not sustainable. So if in your plan, you don't trade on Monday, you don't fucking trade on Monday. That's the point of a trading plan. And I don't know how many of you hold yourself accountable. I hope for every single one of you that you will hold yourself accountable. Now, and I can guarantee you, if any of you, and there was 2 weeks ago, there was a huge, for myself personally, there was a huge mindset shift. I thought I had it planned. It's my third point here. If you're becoming successful, don't let your ego drive you forward. Let gratefulness and gratitude drive you forward, because market will humble you. It'd be a perfect setup. It would be every checkpoint, and you don't know what's gonna happen, but what's gonna happen is nothing you expect, and there'll be a slippage and all kinds of stuff, and you'll be an emotional wreck because karma is a bitch. 100%. Karma is a bitch. So, and I have countless examples of how karma is a bitch, by the way. I'm gonna try this one more time, promote everyone to panelist. All right. So, all right, someone raised a hand. Who raised a hand?
I think ultimately, can you hear me?
Yeah, go ahead.
I think ultimately it's all about consistency, because it can come down to your trading plan that you don't trade on Monday. So you have to honor that consistently. It's not that trading on Monday is a bad thing, trading any day is a bad thing. It's just no matter what you do it with pure intention of doing it. No good, no bad, no, I only take accumulation, I only take distribution. Just when you see your thing show up on the charts, do the thing you said you would do without any qualms, any doubts, right?
I 100%, brother. 100%. I agree with that. It's about being consistent, and it's like at the end of the day, guys, like who gives a shit, excuse my language, about Instagram? Like personally, I post on Instagram all the time. I have a different agenda with Instagram. I run a business, a Furious Snipers LLC. I want more people to see. I want to help more people see what I see. I want to bring more people into my organization. That's why I post. I don't post to impress anyone. I don't give a shit about impressing anyone. And at the end of the day, it's all about equity and about what you do. So think about a car repairman. If a car repairman says, hey, you know what, for this particular car, I'm going to use this part. And then somebody tells, you know what, use generic brand. It's kind of fits. It can lead to a disaster later, like wrong brakes or something. I don't know what I'm talking about. But what I'm saying is the same thing is here. If you don't take this seriously, you can lie to your mentor, you can lie to whatever, you can do whatever you want, but you can't lie to yourself. Like you don't have to show shit on Instagram, but yourself, you know what's going on. And if you're like 6 months, a year in the same place or worse than you were, then it doesn't matter how many 1-to-100s you got. You don't have discipline. I talked to Rock today briefly, and I told him, I'm like, we preach this shit all the time, and it's like people will still find a way to self-sabotage. For me, what the transformation, if anyone's wondering, is I only traded my setups. So meaning I trade my setups, I do research trades if the setup is not there, all this stuff. My problem was, especially when my wife left to Russia and I was alone here and work slowed down, I was trading all the time. I was trading too much. It's trading too much. There's only so much you could do, and it's actually bad for me, bad for you. So for me, it was sticking to 3 kill zones, which is London, Asian, and New York kill zones. And it sounds very simple. What it did for me is completely cleared my mind of stress. Like I'm not stressed at all right now. I don't give a crap about what market is doing. I don't give a crap if somebody got into an amazing setup and gold about to drop 500 pips. I don't, because that's not my time to trade. I'm gonna, like a clock in, clock out of work. I'm gonna go into work at 7 in the morning, and I'm gonna trade till 10 in the morning for 3 hours. I'm gonna look in the first hour for the setup, for the manipulation, second hour to enter, third hour to manage my trade. That's it. I'm done with it. Great. Afterwards, I'm gonna go and do my own business. I'm gonna take care of my family. I'm gonna do all this stuff until Asian 8 p.m. for instance, until 11. I'm gonna look at Asian pairs and see if there's a setup presenting itself. And you know what I mean? So yes, I agree, Kelly. Monday is not, like for me, Monday, I trade on Monday only when there's a perfect setup at the time that I specified. Then I would trade it. Today I traded US 30 sell, and it was brilliant. I traded a small position because I wasn't 100% positive on the trade, which I'll show. You can,
It's in the chat. It's on our YouTube.
oh yeah, Kels, youtube.com, go to Furious Snipers LLC, go live recordings, not videos, but recordings, live recordings. And
There.
yeah, it should be there after about an hour after the
There's
stream.
the link right there.
There you go. Yes, subscribe, hit the bell button, hit the like button, all of it, you'll be always notified. Yeah, I wish I could do it earlier.
I think adding to your point, Yuri, one of the biggest things, I know we talk about this, you and I a lot, is when you have a bias and an analysis, you have the overall market, you kind of know what's going to happen or what you think is going to happen. But admitting when you're wrong and admitting early when you're wrong, so that you don't add to losing positions, because that obviously leads to blown accounts. Because I mean, we've all done it before. I think this is why we have blown accounts before, is because you're in a buy or something and it drops down and you're like, I know it's going to go up, and you get another buy and another buy, and then you basically the leak that's draining your account turns into the floodgates open, and then also you just blew your account.
Guys,
But
yeah, go ahead. Go ahead.
yeah, but understanding that you just misread the market and trying to be humble enough not to predict where the market's to go, rather than just respond to market conditions. And once you can make that transition and that shift, your emotions settle, and you can see everything more clearly and ultimately be more successful. And I think it's just as wrong or just as problematic to have wins happen. You get into a buy for some reason, it works out, but you have no reason, or you don't understand actually why it worked. It just worked. And so then you didn't learn anything, but you also didn't go through your checklist. You didn't go through your trading plan again, and you just got into a trade because you felt like you needed to trade. And that could lead to a negative, positive, basically, and also over trading again, because you get that adrenaline and that high. It's almost kind of like you get addicted, and then you overtrade then.
Yeah.
And then
Don't get addicted to losing.
Yeah.
Is what I was gonna say. It sounds funny, but what I mean is, like, let's say FTMO account or whatever, and you lose and you go reset, and you start doing very good. You start, okay, you know what? That's it. I'm not gonna be doing stupid shit. I'm gonna start slow, and you start, smaller amounts, you start risking less, and everything's going crazy, and then you're so freaking close to passing, or you're so freaking close to whatever, hitting a target, and you get greedy, and all of a sudden it's like, hey, you start deviating what I said, just like little by little, and then it takes 1 or 2 trades on something like NASDAQ to undo everything good that you did. You were freaking amazing, and then you undid everything you did. What's wrong with you? Like, stop doing that. So what I mean by that also is, if shit happens, it's much easier to come back from a 2% loss than from a 20% loss, from a 30% loss. It's much freaking easier to come back from that. There ain't no fucking coming back from 50% loss. You lost 50%. What you should do is get the fuck out from the computer for a week. Don't open it. Then you buy a new book for the mindset. You go freaking do Tai Chi, go into an ice bath with Joe Rogan. I don't know if I can know what you do, but you separate yourself because you're done. Like, the more you trade from that point on, the more losses you're going to be incurring, just like what you said. Stop pushing the shit away. And then you'll get into, and I guarantee you, every single one of you, if you traded for more than a year, experience this. No matter what you do, no matter how hard you try, it just doesn't work anymore. You can't get back into this amazing streak that you had, and because it's spoiled. It's like a rotten potato. It's not gonna come back to being a normal potato. You need to complete mind reset. And the only way to do it is completely disconnect, do something else, and then come back and actually hold yourself accountant. Be honest with yourself. I literally 2 weeks ago bought this. It hasn't come in yet. I've been writing down on the freaking sheets over here. It's a unorganized clutter. But I'm gonna organize it and write it down normally. But I bought a nice journal. It was like $30. It's like, you know, you unwrap it. It's really beautiful. It's like pixie dust and unicorns and shit. Jenna type of stuff. Unicorns, yeah. Anyway, what I mean is, like, I spent money for that shit. I could have bought $2 freaking notebook, but I want it to be super, super neat. Every freaking trade. All right, I will, Kelly. Every trade is written down. What I'm feeling is written down. It's all, and it doesn't have, you don't have to write down that much, because what I'll be showing you in the setups, it's 1-2 setups a week that can, you know, like 1-2 pairs a week, not setups, 1-2 pairs a week that you just keep going. You don't need to. GU and gold literally can flip your account in one day. I will show you. So you don't need 500 pairs. You don't need all the people sending you charts and doing setup on CHF, JPY, and like some bullshit pairs. No, you need to find the pair that works for you and stick with it. Understand how the market moves, feel, breathe, market, like, and that's it. And then hold yourself responsible. And that means sometimes stepping away. If you took 2, 3, 4 losses, whatever it is for you, or whatever percentage it is in your trading plan, that's it. You're done. Don't, this is a gambler's dilemma. Hey, if you gamble, you know, like, oh, I'm just gonna get my money back now. I'm just gonna get my money back. Maybe I'll double or nothing kind of thing. It doesn't work that way. The power of 2 is crazy. You only have so much money. So I don't know. This is all I want to talk about today. If anyone has questions or any comments, feel free. If not, we can go into our setups on the charts.
You know, I think it's also very, very important to we talk all the time, Yuri and I, about only focusing on a few things. If you know anything about me, I trade UCAD every day. That's it. Oil, UCAD, look at the dollar index, and every once in a while I get a USD JPY trade in. But because you can't watch everything all the time. If you do, you're scatterbrained, and you get to understand how those currencies move, or how those cross pairs move. I had a mentor early said it's kind of like trying to date, 15 women, and you have to learn all their tendencies. You're not going to be very successful. You're going to get caught cheating. So you've only got to trade one pair or so. But the whole point is you start learning different tendencies and different times that they move, and different idiosyncrasies of those pairs themselves. Another thing is, saying all that, try to essentially just go off your trading plan, or to go off your setups. Don't get influenced just because you're looking for UCAD buy and you see a bunch of people looking for UCAD sells. Don't change your bias just because somebody else put a chart up there, because you all the different reasons why. You might even have different entry points, different exit points. You might be trying to hold for 3 weeks. They're only holding for 30 minutes. So don't let them influence you either. And then if you're trading, stay off Instagram until the end of the week. So.
All right. Okay, so here you guys see my screen. I got our Instagram tags and our YouTube channel and the bootcamp registration link. Just gotta say a couple words. So bootcamp is gonna be October 9th. It will cover everything from basics of structure to every entry protocol on how we trade. And it will be me and Peter. It's going to probably be 6 hours. It's going to be recorded, shared, and probably leaked later on. Can't avoid that. But anyway, so and then if you guys have any questions at all, and you have within the charts or mindset, you want to talk, just be friends, hang out, come over for my Halloween party that's coming up. Ryan, hint, hint, invitation. So anything,
When?
just contact us. Yeah, my wife suggested we do a Halloween party for the housewarming, new house. Yeah,
There you
so
go.
we're gonna invite a bunch of folks, and I have no idea what I'm gonna be for Halloween.
Sweet. Well,
Maybe Bruce
my
Lee.
mom's coming in about that time, so maybe my mom will come.
Hey, nice. Hey, more than welcome. All right. So like I said, like I always say, everything we say here is just our opinions. Don't, Forex involves risks, so don't. If you fuck it up, it's on you. Separate man, Tim at Lord Fury 83 is my Instagram. Telegram, the same thing. Ryan Billenberg for Ryan and Furious Snipers LC. Just pick one and send a message. I'll always respond. If I don't respond right away, that's because my life does not revolve around you, contrary to the privileged popular belief. But I will reply to you, nevertheless. Okay, so let's talk about some crazy, amazing setups. And gold was number one last week, and I missed it, and I hate myself for that. But hey, it is what it is. It was so brilliant and beautiful. All right, one piece of advice right off the bat. And, this is, besides mindset, this is number 2 most important thing, or the cause of failure, I believe. We as snipers, enter the order flow shift or whatever we do, or Wyckoff test or last point of supply or demand. We enter on like 5-minute or 1-minute time frame. What that does to people that are undisciplined is glues them to that one time frame. You guys, smart money, aka the banks, do not operate on small time frame. So if you have no idea what the big picture is showing, how can you trade? Higher time frame has all the answers. So you always start with a higher time frame. Higher time frame is like monthly, weekly, daily. Even 4 hour is kind of a lower time frame. So you got to see what's going on the daily in order to figure out at least what the market is doing first. So I don't think it's important to go on a monthly every single time you look for a setup. That's a little bit overkill in my opinion for intraday traders. But at the beginning of the week, you bet your ass you have to freaking, at least what's going on. Like, what's gold doing? We're consolidating in this range here. We're freaking high up, right? So, it's just consolidating on the monthly stuff. Okay, so gold setup, we have created a crap ton of liquidity, and then we came down and we failed to take out this liquidity, which is even bigger. So most likely gold is going to turn around, take out this liquidity. And again, I have no idea what's going to happen with the market. I'm just giving you one scenario, what I think. Exactly. Ryan. And Tim. So yes, exactly. Yeah, but there's a ton of pairs. You don't have to wait for daily POIs. You can look at 4-hour POIs. You can even play in 5 minutes, but just don't get stuck. Make sure when you find a setup, make sure to switch to the higher time frame, because if you're in the middle of nowhere, I almost guarantee you your setup is either going to get clapped right away, or you will be in a short-term inducement trade. And even if you win it, you need to understand that that's a short-term trade. So you need to know where to take profit. Okay, so here right now, what it looks like on daily is that we're retracing up to fill this balance, and then gonna keep going down, because the 4 questions you gotta answer are what? Who knows the 4 questions? Where did the bank get in is number 1 question. What's higher time frame doing? Number 2 question. Where is liquidity sitting right now? Where is the market moving? Question 3. What's retail doing at this moment? Question 4. If I was retail, where would I get in? Right. So those are 4 questions now, part of my plan. Anytime I try, hey, this looks like a good setup. Okay, let's answer the 4 questions. So to me, the bank got in right here. And that's the problem, right? When you start trading Wyckoff, unless you're Mike Azevedo, who is like the goat of Wyckoff, um, you get stuck trying to figure out if it's an STB or ST, or if it's a like a spring, or if it's an STB, if it broke structure, if it broke just had a boof. Like, stop it. Answer the 4 question I told you. Everything else will fall into places. I can mark up Wyckoff after it happened anytime, dude. You don't need to. You need to understand the AMT, which is, by the way, all of that is going to be discussed in detail at the bootcamp. But AMD, accumulation, manipulation, distribution, mitigation, and everything will fall into places as far as Wyckoff. All right. So what happened here last week is gold, right? We were just moving up. We're moving up nicely. And if you look, like I showed you on daily, what happened on daily? Right? What happened on daily was we had this ginormous drop. We took out all of this liquidity. We retraced and created a range, right? There's still imbalance above those highs. We slammed the market down, took out some inner structure, right? Because people were trying to get in, smart money people, whatever, tried to get into a buy, but you're at 50%. Like, this is equilibrium for the market right here, right? So then we slammed all the way down. It wasn't enough juice to break through this, so we need to get liquidity, but we don't have any liquidity to the top. We need liquid. Market needs to eat in order to move. Market needs liquidity to create structure, which is why if the structure is created, guys, this is some nuggets for you. If the structure is created but liquidity has not been taken, that structure is a false structure. Even if there is a break of structure, you will be led to believe it's now going the other direction. But if the liquidity wasn't taken, the major liquidity wasn't taken, that is a false structure. That is an inducement, which is why what happens a lot of times is market will be going up, then it will come down, and then it will come up and take this structure out, and you're left wondering, what the hell? It broke the structure to the bottom. Why couldn't I mitigate from here? Why did it break me? Because we are at a different time. We are at a time where smart money is the new retail. It's a trap. It's called a smart money trap, or the other way around, the same way. We're going down. We're going down. Then market comes up, takes out the structure, puts in a new structure, and then it comes down and takes out this, and then it moves up. And you're left wondering what the hell, it broke structure to the top. I thought Mike Azevedo or whoever said that this is STB, and this is the major break of structure, which is signal of strength, and then there's still a spring. How come? Because that, my friend, is a range, and it's an inducement for early buyers. What it does, however, it show you the true nature of where they want to go. They want to go higher, but you need to wait to see if there's going to be an order flow shift in your initial point of interest, or if they're actually going after liquidity first and then coming higher. Nuggets dropped. Anyway, so gold. Coming back to Mike before I go on a new tangent. So here's what happened, right? So on the daily, took out the liquidity. I said blah blah blah. Then it came up, created some more range, and this is what I'm talking about, guys. Look at this. We have flag of America. It's a flag. Right? So we have a range, and people start thinking this is some kind of distribution or maybe reaccumulation or whatever they start thinking about Wyckoff. There's people that are coming here. So my question is this: where did the banks get in? The answer is the banks got in all the way over here. The banks got in all the way over here, and then they started selling, sucking in all the buyers, sucking in all the buyers, sucking in all the buyers, sucking in all the buyers. There's no bank here. This is them sucking in all the buyers. Buy the dip, buy the dip, buy the dip, follow the trend, which is good for intraday traders. You know, there's markets fractal, so you can find trades there. But I'm giving you the big picture of what's happening. So what happens here is we just explode from, and this happened on every freaking pair. I'll show you. We explode for no reason on, you know, at this point, whether 2 weeks ago or 3 weeks ago. This right here is manipulation. What do most people see? Well, I'll tell you. What's retail doing? Answer the questions, right? Bank got in over there. Higher time frame. We're on a retracement from a huge thing. Where is liquidity? Liquidity is here. Liquidity is here, right? Okay. What's retail doing? Well, they're trading right here. Support resistance, right? So people at support, they bought. Some are here. Some got triggered. You know, this sell stops got triggered here. They got killed, but the buyers are still in here. And they're getting a successful trade. They're killing the sellers here, right? They're taking the sellers, triggering buy stops, sucking the people in. It went from place. What do smart money newbies do? Oh, look, that's the high, that's the low, that's the high. So I should get in over here. See that purple? Purple is smart money trap. That's not a setup for an entry. Yeah, you don't. Well, I don't. I trade only GU, EU, gold, and US 30 or NASDAQ. And then during Asian 3 hours, I trade AJ and CATJ. That's it. But I can, you know, analyze any pair for you if you need. Okay, so we come up, right? And so what happens then? People try to get in here. Smart money traders, right? Break structure to the top. I'm gonna try to get in. And let's look closer. What happened here? We have a reaction. Boom. It's a shady reaction. But we have a reaction. So we reacted. Here's the wick. I don't know if you can see it. Get rid of this for a second. You can see this wick here reacted, and then this wick here reacted. That's your demand. That's the last time the buy was offered, and then we sell off. What do I say? 100% of the time. 100% of the time. If this IFC didn't work out and this was the last reaction, we come back to supply from the other side because there's still money. There's no way retail could have made this candle. There was money put in here by an institution, $100 here, $300 back. So, or $1 million, whatever. Right? So there's still money. They did not mitigate out of it. So they mitigate from the other side. So you could have gotten a trade here. That wasn't last week though. Right? What happened last week? When this sell happened, we now are after on the big time frame all of this liquidity. All of this is liquidity. Don't try to buy in here. All of this stuff is liquidity. Don't try to buy today unless you know where to get out. Right? So we got into the range 2 weeks ago. You see my black lines into the range. But where did the bank get in? What I just say? We came back to mitigate. So this was the last point of mitigation, right? And then we drop. Never had a chance. This was the last buy offered. Tapped into the last point of supply. We drop. We create the range. We range. People try to buy here, buy here, buy here, buy here. People try to say this is Wyckoff accumulation instead of understanding what the big picture is showing. Are we like, how awesome is this? They're sucking people in, sucking Wyckoff traders, sucking smart money traders, sucking retail traders. Once again, answer the 4 questions. Where did the banks get in? Here. Where is liquidity? Here. Here. What's higher time frame doing? We're still bearish. Okay, we're in the range. You don't want to play in here. You want to play outside of the range. I wonder, is this accumulation or distribution? Well, if the bank got in here, they need to mitigate. So if I'm wrong, at least I'll get a reaction from here. So it perfectly taps right into here. And then slowly, slowly, slowly melts. Right? So this trade right here, if you would have gotten in on this, or if you know reversal, look at what happened afterwards is just brilliant. If you missed this trade, you could have come in here, right? On a smaller time frame, even smaller time frame, when you play in here and you're looking for order flow shift or whatever. Once again, Asia, right? Asian range, London opens, takes out the low, comes in, New York opens, takes out, well, this is not New York open yet. This is my 3-hour window. Like I said, 8 to 11 Eastern, right? So it comes in, takes out the high of the Asia, goes straight into this, takes out, triggers some buy stops here, right into this area, and then keeps dropping. Asian range taken, and go, right? Right. Or you can say, you can somehow figure out how this is Wyckoff redistribution. All of this is Wyckoff redistribution. Or you can just understand that on the smaller time frame, with everything I said, here's your accumulation, and here's your manipulation, and then this is distribution, but there is no mitigation, and there's a reason for that. The reason there's no mitigation is because if retail was trying to buy over here, if we came back to mitigate, retail is able to get out at break even. Now, why the fuck would they want to do that? How would they want to give you a time to get out at break even? That's why there is no come back here for a re-entry. Okay. So that was the trade. Trade of the week, probably. So let's look at what's going on now. I don't need to trade every day, guys. I don't. If you do day trading, what higher daily and 4-hour? With indices, we'll get to indices, but 4-hour for direction, 4-hour, maybe 1 hour. Entries at 5 minutes and 1 minute, but 4-hour and 1 hour. Yep. If you'd rather ask a question out loud, you guys can ask a question out loud. Or if you're an attendee and I haven't made you panelists, just raise your hand and I'll get to your question. No worries. Okay, so gold, again, to me, if I look at higher time frame, this is what we're doing. Long term. Go to daily. All right, so this here, you see the diagonal line, right? This is not where the smart money got in. Smart money got in here. So to me, all of these buys after that, it's all liquidity to the bottom that people are trying to do. And what's going on right now is an inducement too early to buy. Retail's buying. They're making them buy. They're making them see stuff, right? So right this second, it's kind of early. I don't like that it's going up right now, but I don't know. I'm not trading until morning. But what I was drawing to myself is here's the first reaction. So you see this line here. Here's the reaction. London on Friday, that was the high of the day. Today, the high of the day mitigated and didn't really do much. So we're creating this range. And then the last point of where mitigation happened is right here. You see the little kissing candle, whatever, the candle without. Right away, there could be stuff here still, or there could be all the way here. So I don't know. I need to look for an order flow shift when it comes to the quarter point and inside here. But I'm not going to guess or put this is not a sell limit setup. This is nowhere, right? The drop started higher, so there's still imbalances above. Like, I don't think it's going to go that high, but who knows? It's gold, right? This right here could have not been mitigated yet, so it hasn't come back to it. So it's a very good chance that we might come up all the way to here, come mitigate out of there, just like we did so far. But in either case, this is 1 hour. When we switch to 5 minutes, I want to see an order flow shift, either in here or even better in there. Because like 5 minute, now I'm looking at it, I don't see anything. Here though, I see a perfect storm right there. Now, here's the thing about trading, right? Like, I don't know where it's gonna go. Here, I'm gonna be disciplined and wait for an order flow shift if it happens during my time. If it happens right now, I don't give a crap. I'm not even gonna look at it. But if it happens tomorrow, especially if it comes here and I see this awesome hidden order block and it's at the last point of supply that went through it and didn't ever come back, and there is a smart money trap here, I can put a sell limit here. 1782 to 1784 is 20 points on gold. It is nothing. And my trade will look something like this. Right? My trade will look something like that. I know where I'm going. This is going to be my first target here. I'm going lower to the end of this because that is where market expanded from that didn't ever mitigate. So this trade is 1 to 38. Right? And I don't even know how many is that. 652 pips, right? 652 pips. 65 points, 652 pips. That's a lot of freaking pips. So if I lose this, I'm going to lose my 0.5%. So what do we do? This is important twin trading. Right? Twin trading 1 to 2, 1 to whatever. If theory is wrong and we do have a reaction because that's where the money is, that's the last point of supply, I'm just going to get a 1 to 2. If I am right, I'm going to get a 1 to 2, and in the second position 1 to 38, which on a half of position will be what, 1 to 17, which is like 17%. I'm okay with that. I'm okay with 17% in one trade. I could be down for a week. On a 200K account, it's fucking a lot, right? It's 38 grand. Down for a month. Anyway, so that's the trade I'm thinking, depending what happens during Asia and during London. If you trade in London, be careful. But I mean, could have a reaction here and come up for one more push, take out smart money trap, and go into here. GU, right? GU was, I traded the most is a trade in GU.
Before you go on, real quick, is there any kind of divergence right now on silver and gold? I was listening to some business news stuff. They said silver had a bigger push to the downside, and I was just wondering because I hadn't looked at it. I had it on the background of the TV here, so I was wondering if we did, because it could be a start. I don't know. I haven't looked at it.
Second, I gotta clean up. Boop, boop, boop. Bam, 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 bam.
Fox Business News or whatever.
Yep. There is definitely divergence. Yep. 100%. It's for a gold buy, but it's against structure. So, you see it, Ron?
Oh yeah.
Yeah. So it's for a gold buy, but again, like the stuff that I drew, right? So
Right.
it's still a lot, right? It's like 200 pips that it could go up from that divergence, right? So it's a very good look. Yeah, this is on the daily too.
Right. See, not everything's trash on the news.
But yes, there's a divergence for sure. Okay. So yeah, GU, right? GU. So like I said, it could be a buy to sell, but I would like to stay disciplined personally and just go to with the trend, not against it. Here's the thing on GU. It is the most beautiful pair of my life. Not as beautiful as my wife, but pretty good pair. Right. So here. I'm trying to promote people. I'm trying. All right. So here, if you can see, this is what I was talking about, the structure and people getting confused. So we had on a daily taken out shit ton of liquidity, mitigated out of the extreme, broke internal structure here for the upside, right? After we took this internal structure, we came into the accumulation on a small time frame, right? And accumulated again. Okay, we accumulated again, and then we came in, and I can even on the daily say we broke this internal structure, then we took out the low internal structure, and then took out the high, giving us a pin again, showing you where they actually want. They want to buy. But if the bankers want to buy, they want to buy low. So they take the structure out. Let's go to 1 hour so you can guys see what this looks like. So this is what we do, right? Structure, bullish here, mitigation. We have not taken the structure yet, right? Okay, but overall, we're still bearish here, right? We're still bearish. We got the low, we got the thing that maintains bearishness here, as Mike would say, right? And then we're stuck in this big range here. So let's look at what happened. This is what I think. Again, this is my opinion. I'll stick with it. I think we're going to be bullish because we have went into the accumulation, accumulated, and came up. We took out structure once, took out liquidity, took out structure twice. We have shown our hand that we want to go higher and take out this. We don't have enough juice. If we took liquidity to the top, market 8, and now it needs to create structure lower. So, introducing inducement. Where did the bank get in? The bank get in here. This is already mitigation. But did we really mitigate? Look at where the market expanded. Where was the last liquidity taken? Right here. That's the expansion past the last point of liquidity. So to me, this is a target. And all of this is liquidity. What do smart money traders do? They start putting Fibonacci over here. They start looking for 78, 71, 80% of the candle, whatever the fuck. They start looking for all this stuff. And what I tell you, smart money is the new retail traders. So to me, unless I see an order flow shift, which is, in here, right? An order flow shift and then a switch complete, I'm not taking a buy out of here unless it's during my time with the order flow shift properly. And to me, all of this is liquidity. And after ranging the market, taking out the bottom, taking out the top, coming in, or whatever they're going to do, they're coming for this low. So if I'm taking a buy limit, I'm taking it at the extreme over here. And I'm going all the way, this is 4 hour, right? Going all the way here because this is where market expanded again, and this is where they want to go, in my opinion. That's my trade setup for, whenever it presents itself. Right now, I don't see much reaction. I don't see much reason for me to buy. All I see is people that are going to try to buy over here. If we go to smaller time frame, AMD forming, right? Compression, accumulation. We're stuck in this range, this yellow box here. Now you got to see, what are we going to do? Are we going to come into the low and take out the low in order to go high and create an AMD here? Or are we going to start hitting into the top, taking out this liquidity to the top, and look at this little red square? You see that little imbalance there, all this stuff? My voice. It could come into here first and then drop. Yet still, you see the green thing, I already mitigated to me, so I think this red square is a fair entry. But also check out the quarter points and how we hit them exactly, 1.37. We turned around, so it's possible that we actually push through to 1.3725 and then gonna come down. I don't know what's gonna happen, but I'm just giving you the areas right now. I'm still bearish on GU because on the higher time frame, this is my target. And I'm going to look for a buy limit over here, and that's going to be a super trade if it works. But for now, I'm looking to get into a sell unless there is an AMD or an order flow shift in this box during my time. But the trades, this has been yet last week, man, I'm telling you. Tell me how, let me see. This is so crazy. So crazy the whole week. See if I see what I wanted to show. Right. So look at this setup. Equal highs, quick swing up, come down. Equal highs, quick swing up, come down. Exactly the same. But intraday was just unreal. I was like, are you kidding me right now? Look at this. Monday, doing a bunch of crap. Tuesday, London goes up. What do we see on gold? What I just showed on gold when I was making through the whole breakdown. What do we do here? We explode from nothing. Who created this? Banks sucking people in, sucking buyers. What do smart money people do? Draw an IFC because look at this. This is a structure break to the top. Higher high, higher low, higher high. I'm going to get in here. First of all, that right there is a trap, and that's the proper buy if you're doing smart money, because that's an inducement. And that got taken, and we had a reaction from here. Right? We have a reaction from here. Guess what you already said? 100%. If this doesn't work out, what are we going to do? We're going to come back, straight back. Into this, to the last point of supply, right? We reacted from here, went away, came right back into it and reacted. Okay? Came back right into it and reacted. Now what happened? This was what? Tuesday? What happened? Wednesday. Wednesday was just a beauty order flow shift on 5 minutes. Was it Wednesday or Thursday? No. CUD2. I was getting in every day on GU. It was just unreal. So what do we talk about? Here's your takeout, right? take out, inducement, take out the high. Here's the reaction from demand, failed to break higher high, took out this thing that created the higher high, took it out. Here's the inducement, take out the inducement, mitigate out the extreme. That's your sell. Boom. Perfect. You missed it. Here's another opportunity. Boom. Awesome. Get into that. That's a long way. Oh, that wasn't last week. Shit. Oh yeah, it was last week. Never mind. Yeah, that was Friday. Friday was absolutely phenomenal, guys. Friday must like just remains to be my best day for some reason. Just freaking perfect order flow shift. At what time? Perfect during my little square. You see that? 7 to 11. It's perfect. London manipulation. New York mitigation. You know? But overall, it's funny how this little algorithm here of moving up like this, like exploding on 5 minutes on Tuesday, is the same exact replica of what happened earlier here. Or is it here? Yeah, here. Okay, so we talked about where I want to get in on GU. It's a sell right now, hopefully here, and then an ultimate buy over there because we're going for this. EU. EU was a beauty too. EU was a beauty as well, and EU was like unbelievable, like as far as the identical as far as manipulations are concerned. Manipulation here, manipulation here, manipulation here. It's all like the same freaking algorithm. So again, Tuesday, identical to GU, except for no real re-entry opportunity. So here again, we create this higher high. Oh, last Monday, I was doing the analysis and we talked about this here, inducement, same type of scenario that happened here. But we're talking about inducement and where the banks got in. And I was saying, this is last point of supply that's unmitigated. And then I left my sell limit here. So it actually came in perfectly into it and gave a reaction, but then decided to turn around and do one more manipulation like an asshole. So gave me only like 1 to 2 and clapped my other entry. That's twin trading, as I explained, right? Then it manipulated this perfectly and slammed down, smart money trap. And again, AMD at the top over here. Mitigating out of an extreme, which is crazy. But manipulation, distribution, mitigation, bam. And then the craziest awesome trade again came on a Friday or Thursday. No, it's Friday, I think. The same type of candle, like giant candle out of nowhere, breaking this, and then just melt. Hang on. I want to make it clear. Oh yeah, so this is a more complex order flow shift than the simple one that I explained. This has to. This one has the engulfment turnaround. Yeah, literally took out the liquidity and then engulfed, well, almost engulfed the candle, yeah. So it wasn't as clean. It wasn't as clean because it never came back into the area on Friday. On Thursday, that no, not on Thursday, on Wednesday. Yeah, so Tuesday was a beautiful entry higher. There is still an imbalance on 3 minutes over there. So this came in, what I said on Monday, Furious Monday, it came in and then it clapped me later, but it got into the extreme, which was above all this liquidity in the little imbalance there. And we came in, melted pretty much. I mean, you could have found it an easy order flow here, but it didn't really give much crap. On Wednesday, it was just shitty price action. So to be honest, I don't think Friday I did get in, but it was more of a gamble, which I yelled at myself, but it is what it is. It wasn't a clean entry. GU though that's the reason, was biggest reason for this little gamble is because GU had a perfect order flow shift, and GU was a perfect setup, and usually they move in sync, right? So I knew that if I'm wrong on EU, GU is gonna well cover it. Okay, so and then finally US 30, that's US 30 and AJ. US 30 did not have any smart money traps, and it was just straight up. It's been for 2 weeks straight up sell. Like, look at this, guys. It's just unreal how clean this is. Like, unreal. And then literally all last week, institutional candle up to go down. We create a range, go up into it, mitigate down, break structure, come back here, create a range, another AMD, accumulation, manipulation into the extreme here, distribution and mitigation from here. Mitigated on Friday, again, from the last market expansion here, and just sold off all the way to today. Today, again, during New York, perfect. This is the one that I traded today. Perfectly came into here during New York, manipulated, took out all of that liquidity into. Now, some people say, well, how do I know if it's going to go to the imbalance or it's going to go to the extreme here? You don't. But what you do know is this is where the reaction is. So this whole area, this whole square from here is the area of last point of supply. This is where the buy to sell happened. So it came into here. So instead of taking a shit ton of lots, you can reduce your lot size, increase your stop loss here. You don't always have to be perfect. We're not here for perfection. We're here to increase our equity. So notice how I created these lines here on US 30, because this is the range. Did we really, when we came into this, mitigate it? I don't know. I don't think so. I think this is an inducement. So because we broke structure here, once again, people are going to try to sell in here. And what they're going to do, they're going to take out this, and people will be like, well, structure is bullshit because it took out a loan, took out a house. No, it didn't. This is where the bank got in. That was a stop hunt. That's where they got in. So take out the high into this, might drop, or at least have a reaction. Again, I don't care what happens because this is not my time to trade. Not my time to trade US 30 at least. Right? But this is what I think is going to happen. I think we took this side. Now we're going to take that side, and then we're going to come down. Because higher time frame, once again, higher time frame, if you look at it, what I say, where did the bank get in? The bank got in over here. This is where the market expanded past the last liquidity. The banks got in here. They dropped the market here to take out liquidity and suck people in. They created the higher high. Now they took out this low, but technically we didn't mitigate. So it's possible that we're just going to come up because they can do whatever they want. Because we have a new low of the week right now that's got established. I do think they're going to mitigate through here, maybe come to 34.5. I don't know what they're going to do. Maybe mitigate here, maybe go all the way to the last point of supply on the daily, which is here, and then drop it past this low to mitigate finally out of where the actual bank got in. So all of this is liquidity. All of that is liquidity to the bottom. So also still bearish on US 30 until there. Everything's consistent, but just monitoring. Right now, this is just a straight shut up. To me, this is once again sucking in buyers, sucking in people thinking this is Wyckoff spring. And most likely we're going to come here. So first we screw with people that are selling in this supposed IFC at the wrong time. Then we come in here for people that think this is the IFC and this was a spring. We're waiting for the test. So we're screwing them. And then finally, once we mitigate, we can, shifting the order flow and finally come in higher. Hope that makes sense. I'm sorry, I wasn't looking at questions. Go ahead, Ingi, go ahead. You can just talk. Unmute yourself.
Okay. Yeah, it kind of like maybe silly question a little bit, but when we look at the higher time frames, and you mentioned that like we can see the their low points, let's say where the banks get in. Like, how do we actually know? Like, maybe it's just like the support and resistance areas where the people trade, and that's why the reaction is like so extreme. Like, how do we know if it's banks versus actual, like, not the retail?
Okay, so you think that there are so many people for some reason so look at the market structure, right? We're always bullish, right? This is indices. This is a little different beast, right? So you think how does retail trade, right? They trade with support resistance, right? Where do you think when we were here, right? When we were at the bottom here, this is daily, right? So the day opens right there with this black back candle here. And then we start selling off like 1,000 pips down, 1,000 points down. Who do you think is buying at that moment? Like, is there any soul on the planet that's buying? Most people are selling their shares on Dow Jones because they're panicking, because they're losing money, right? FOMO people in Forex brokers, they try to get in to not miss out. Okay. Still, some other people think of this here. You see how it bounces as resistance and support. So if this is support, they're buying out of here and they have some kind of number here where they're selling. Now, the banks know where the money sit, right? They know how far to take this. So they take out the resistance, support resistance traders. They induce people that are FOMOing and selling. And then this reaction, this candle here, this giant reaction takes the market from 33,000 to, which by the way is 33,050, which is an even number. It engulfs this candle and it takes the market for 1,000 pips up all of a sudden. And I don't know how far it will let me go. I should have rewinded. All right, I'm done. Hang on. right? And this over the course of a day, just these giant candles, this here in 1 hour, we went. There's no way this is people trading. Because the previous day, previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bearish days, 10th one taking 1,000 pip dive, taking out liquidity, and then right after taking out liquidity, having this huge reaction for 1,000 something pips up. That reaction doesn't happen. If this was retail, you would see these candles, right? You would see these kind of candles. That's how you know, right? Also, there is support resistance is higher. They took it out. So that's how you know. Does it make sense?
Okay, yeah, it makes sense. Just in regards to
So you
use
want to look
Thursdays.
for wicks. You want to look for
Mhm.
these types, and you want it, understand that banks always get in at the bottom or at the top. There's no ifs or buts. They're get in at the top and at the bottom because they buy the lowest, they sell the highest, right? Then they mitigate and manipulate stuff, but this is the low where they get in on a daily. All right, good question. Good question. What else?
Thank you.
Right, you're good. Yeah. Okay, so AJ was pretty awesome as well. I had mixed trades because I saw a perfect Bykov here developing, and a spring of what I thought was a spring was here. But this is where I make mistakes too, right? We're still fucking bearish. We're still fucking bearish. And where did the banks get in? Right? They got in here. Okay. They got into this accumulation. So even looking at that, because that took structure to the top in the daily. When we were in here, we were just slightly past 50% in the middle of all this. Right, in the middle of this. We might turn around here, but most likely we'll keep coming down on AJ. Right, so this was a beautiful trap that I got into. Because to me, I was just taking a buy. I took a buy right here from the order flow shift on the small time frame, and I got a nice win on Thursday. But then when we came here, I did a buy again because I thought it's just gonna, take out and keep going, a continuation into here, trap this, maybe come all the way here. And of course it clapped me, which is okay. Because I was already, I took Thursday probably about 2% up, and here was 0.5% down. But I was already killing GU, so it didn't matter. I also took trades during my time, which is good. And then I took a ton of trades because there was another trade on Friday, a perfect trade here from something I do now, which is pin hammers that are getting engulfed like this and stuff, and then comes back into it and a sell. So that was just AJ. Again, like AJ technically is in like 15 minutes is when you should be looking to trade AJ, because this is Asian pair, right? They move during Asia a lot. I mean, they move still. London is the biggest market no matter what. And so is New York. But if you want to trade Asia, or if you have work and you want to look for setups, go for Asian pairs. Don't go for majors during Asia. Go for, GA, or AJ, CatJ, whatever. Yeah, so if I were to look at the AJ right now, all I can see is right now we have, again, an inducement. Son of a bitch. Here's the low that we created today. That's a low of the day. maybe low of the week, who knows, right? Here's the reaction that took out this little high here. We're in the range. We want to see what the market's going to do. Is it going to take out the high first during Asia, or is Asia going to create an inner range inside of it? And is going to be an inner range in here somewhere. If there's going to be an inner range, maybe we can play out of here. Or if we're going to keep pushing down, then this might be the high of the week for now. Who knows? But we want to see the manipulation happen first. And right now we're pushing up. So if we're pushing up right now, that means we're still bearish. I know it's kind of backwards thinking, but that's what it is. If we're manipulating the high and the lows, we're sucking in the buyers, right? This is sucking in all the people that want to buy. We're sucking in the buyers right now. We're getting buyers on board. So once they take out this high, trigger more FOMO people here, right? Take people that are selling somewhere here, maybe, especially if they do a double top real fast, people start selling. So if they start selling, got to think about where can they put their stop loss. Typically, put it over here. So if they put it over here, it's not going to surprise me if it's going to take out this little high, come up to this 80 even level, right? 80 even level, come up to this level, and this little peak is going to be the entry. I'm not saying, I'm speculating right now, right? I don't know what's going to happen, but that's why if you want to trade actively, if you want to trade, you want to be here. You want to, okay, 4 pips, right? If it's going to come there, hey, 4 pips to get 94, sign me up. It's 1 to 23, right? You can also see that technically this is the last redistribution from which it happened, but because we had this manipulation and then this type of mitigation, this to me is a target, especially if they, if they start selling here, because people either, we also have this that's unmitigated, right? Lower. And in that lower place, we do have this exchange point. So for some people, it's like, well, why didn't come all the way there? I was waiting in the extreme, like Yuri told me. Well, there's money sitting here. There's people that were buying from here, smart money traders, thinking it's going to come into here to go up. So it never mitigated. So there's orders there. So it's very possible this is going to take out this high, come into here. This is at quarter point 79.75. We know AJ Labs quarter points for people who know who Mike Miles is. So you could enter here, small stop loss right there, and boom, right? All according to your protocol. All I can say is this is going to get wrecked and this is going to get wrecked. That's the range. All right. Questions, comments, concerns? Someone's raising hand. Oh, that's still.
It's me. Oh, it's me again. Sorry. I have a last question though. In regards to order flow, I know like you explained before, but could you just tell me again, like as a day trader, if I'm in a trade and once I enter, I focus on like, smaller time frames, looking for a break of structure. How do I recognize the simple pullback versus the like actual break of structure on like smaller time frames, like 1 minute, 5 minute?
Well, first of all, let's go to US30 since you like it. First of all, you need to understand what the market is doing on a higher time frame. So if you look at this, right? Look at this setup here, right? So for instance, you're looking at 15 minutes, okay? So let's say you're trying to get in. Where are you trying to get in? Like, let's say you're trying to get in on Thursday. Okay. Trying to get in on Thursday. You wait for market open. Okay. I'm on 15 minutes right now. Okay. Do you see that market is bearish on 15 minutes? Yes.
Yeah.
Okay. So you see, do you see where the market was manipulated on a Tuesday? Right? Here we took the highs.
Mhm.
Okay. What happened after we took the highs? We consolidated. You see this wick?
Mhm.
That's a reaction from this demand, a down move, up move. So this right here was the last point of demand. We have reacted, then we engulfed it and sold off. So if you take this red thing that I have, right, and you take and highlight this reaction from this wick to there, right, that is right there the last point of supply. Last point of supply that hasn't been mitigated, right? This reaction up to go down. That's the last point of supply. This is the last time that we have bounced from something of a buy, okay, before we broke this internal structure, right? So you know this, okay? So now we're bearish. So you know that this right here is your structure. This right here is your point of structure that you need to break in order for this market to be bullish. And when you come in on Thursday, this here broke internal structure, formed the low. So you're between here and here. So until this point is broken, you are still 100% bearish. Until this is broken, you can't say that you're continuing bearish. So that's your range right there. Okay, so when you come in here, all of this is noise and pullback, complex pullback. It's not doing this, it's doing a bunch of crap. So when you're stuck in here, and this is 100% cleanest AMD I've ever seen in my life. Compression, accumulation, manipulation, distribution, mitigation. Here's your entry, number 1. Here's your entry, number 2. Here's your entry, number 3. Here's your house entry, sell limit, because you know that this was where the manipulation happened, and this is the last point of supply from which we never mitigated, and we destroyed all of this internal liquidity, right? So you can put easily a sell limit here, and if sell limit doesn't happen, you just wait for the manipulation, break of structure to the bottom, and mitigation, right? Does that make sense? So you know, so the way you know is on a smaller time frame. Like let's say I go on 1 minute. So you know 15 minutes, I just showed you 15 minutes is bearish.
Mhm.
So 1 minute, 1 minute, where are we? All right, 1 minute, going over here. Okay, so let's look at 1 minute. So on 15 minute, it tells you what we're going on. So that's how you know not to pay attention to 1 minute at all, other than the entry. Because let's say you want to wait, so you established in 15 minutes, we're bearish, we're waiting for it to hit this. But let's say you want to be disciplined and you want to enter only off order flow shift. Okay, what do we need for order flow shift? We need an IFC that makes a high, a reaction that fails a high, break of structure to the bottom, and then what's it called? And then mitigation in this area. And you can find some points of mitigation, right? You can speculate that one is here, speculate that one is here, if that's what you want. And I don't know if market gives you that. Yeah, okay. There you go. Market mitigates. Market mitigates again. That was the order flow shift rules. Again, explaining. Right? You're following the order flow. Boom, high. Okay. Right? Cool. If you're thinking of, if you're not understanding higher time frame, which you should, but if for some reason you don't, let's say, okay, and you're falling into a trap of smart money, even though to me it's very obvious that this was created as this is market open, we're manipulating the fuck out of the markets. So if you fall into this trap and you got this, where's your risk management? It's right here. You want to enter there, right? So you entered here. That's your stop loss, and you're going higher. So you lost your 0.5% here. What do I say? If the IFC doesn't work out, happens 100% of the time, Ryan.
What's that?
Market.
Sorry.
What did I say? Happens when market breaks your IFC that you were wrong about.
It comes back and then it
Comes
taps
back
and
from the other
crashes.
side. So as soon
Right.
as you fucking lost this here, you know that market will come back from the other side, and you
Tap.
sell in the same place.
Right.
After you get clapped, you don't try to buy here, 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 here. But again, this is a way to wreck your account, because higher time frame, and in this case, you only needed 15 minutes. Higher time frame is going to tell you what we're doing. You can't be watching a 1 minute unless you have an IFC. In this case, oh shit, sorry. Uh-oh, I erased all. Hang on. Come back. I erased all my doodling. It's a lot of doodling. So unless you understand that this is where you want to watch, so you get on 1 minute when price gets in here, not earlier. When this hits your, so we're in here, you're watching market open, you want to see an order flow shift in this area, you get in 1 minute to try to get a sell. You can't get into a buy here, because even if you thought market is bullish, in order to get into a buy, you want to be in the bottom, not buying at the top.
Mm.
This is a buy. Let's say you thought this was a buy. Where is lower 50% quadrant? Over here. What the fuck are you trying to buy there? Yeah, don't buy there. So, and the only way to do this is completely to be relaxed, like analyze, figure out what's going on. You can't go like, okay, I'm going to wait till market open and just be here on 1 minute. You're not going to figure out what it's doing if you don't understand where the market is going. Like US 30, and I'm not saying it to pick on you at all. I'm just trying to show you that like US 30 on the daily, right? US 30 on the daily got into a buy over here, took out the liquidity, did not come close to this yet. Create the low, create the high, create the low. Here's the shift. We shifted on the daily to the bearish thing. And, you know, to be frank, like I'm not even 100% sure on this low holding, because, you know, this could all be, all of it could be liquidity, because, you know, but, you know, with US 30, you got to be careful because the market mostly is bullish. But we've been bullish for a long time, like we could have a drop like this over here easily, come all the way to freaking over here to take out all of this liquidity. So at this point, we're bearish, and you need to be looking for sells until on a daily, until this is broken to the top. So here, like, let's say we're trace, we're still going to be looking for sells. But knowing that, you got 15 minutes. So on 15 minutes right now, what's going on right now?
Just pull back, I guess.
Like, yeah. So here, once again, like, we established the low, we established the high. Here's the low of the day. What's happening?
Is like mitigation or something? Or like buyer's trap?
What are you talking about exactly?
Oh, I thought you asked me what it is.
No. I forgot if I went over. I think I went over US. Yeah, I went over US 30 already. I was saying I'm still bearish because I think this is the trap here for buyers, and we're gonna keep going down. Tuesday usually establishes the low. This is where I'll be looking for a buy because, like I said, a higher time frame and where the banks got in is here. This is the market expansion past this. So I think we still got quite a ways to go. We could fill in this imbalance here, take out the highs first as well before coming down, but we'll see what happens. But at the moment, we're still freaking bearish. We've been, and the thing is, with this, it didn't even induce anything. It was just simple mitigation, just nicely coming down, easy smart money entry, like just trading US 30 could win on Friday, could win on Tuesday, it could win on Thursday, it could win on Friday, just by following this mitigation. Take out liquidity, get in an extreme. Take out liquidity, get in an extreme every time. Hope that makes sense. All right, I'm getting tired. It's 8 o'clock. We trade an MT4 and MT5, Mr. Jake. All right, I'm done going over pairs unless somebody sends me a pair that you guys want to send me a chart that you want my opinion on. So once, go twice, go 3 times. Send the charts, ask a question, or let's adjourn. Yeah. Just feel free to be here. Feel free to talk. Go ahead. Burkham. Thought you had your hand raised. Thank you, Jake. Thank you, everyone. All right, guys, great session. Like I said, like we said, reach out to us if you have any questions. Oh, there's a chart. There's a chart. Euro GBP. Distribution breakup structure.
I'm gonna share your screen.
So what's going on here? Euro GBP. You looking for an entry here somewhere? Because I'm not sure where the setup is. Oh, yeah, Bitcoin is crashing. Last time I checked.
Give me a minute. I'm gonna check the 5-minute time frame. Give me a minute.
Say it again.
I'm gonna share the 5-minute chart. Give me a minute.
Oh, okay. All right. Gotcha. Yeah, so it looks bullish from what I see. You're saying maintaining bullish flag. Very good. It looks bullish to me that 8-hour supply is getting racked, or it got racked. Yeah, that wick is the target. That wick is that red wick of yours is the target. It might have a reaction. No, I doubt it though. I doubt it. Because again, as what are retail doing? selling from resistance. Where's resistance? Right there where the equal highs are. Where is the stop loss? Right at the top of the wick. Easy, simple. Where is the stop? I mean, this is too easy. Right? This here. That's where the money is. That is that distribution that you guys talk about. This is the last time they mitigate it. Oh, crap, I can't. All right, this is where we're going. Yeah. From the chart that I see, at least. Okay. All right. Yeah, I would not do it if I were you. This is 5 minute. Okay, all right. No, I disagree 100%.
Yeah.
That is not, this is not structured. The creek. So you might get something like this taken out, that, and keep going up. Yeah, this is still bullish to me. 100% still bullish to me. That to me is not structure at all. Yeah, I don't see anything that tells me to sell right now. All I see, especially from the higher time frame. Yeah, I'll get to GBP and ZD in a sec. So yeah, to me, where's the first chart? What do you think, Ryan? You think you like it?
Yeah, well, I'm kind of with you right there. I mean, there's nothing really showing any kind of bear strength at all.
Hey, look, like where
Overall
is going to
structure-
be retail?
Overall
right,
structure's still bullish.
Yeah, retail is going to be selling from here, right where we bounced. This is going to be the stop loss. So why you want to sell some shit here?
The only way I would even be bullish if it broke all the stuff to the bottom and then had a retracement and then gave us a little bit of, some kind of order block or something. to get
Bullish
into.
or bearish?
Only way I'd be bearish, like if it actually broke strongly to the downside, taking out all those targets and then retraced, then I'd be bearish. But right now, I'd be looking for nothing but buys.
No, so this is, yeah. I mean, to me, this is super bullish. I mean, always trust your analysis above mine. Obviously, if you see something, it's just, if you want my opinion, I'm thinking you're gonna get killed. So this is not a, because to me, like, why is this structure?
I would
Structure,
say healthy trading, healthy bullish trading.
yeah, maybe there's some kind of reaccumulation happened. And now yeah, that's not a high probability setup. It's just an imbalance and a trap, but there's no, like, the only way you'd be selling if there's a convincing order flow shift here, but be careful. Like, so you could be selling this if it's at the right time for me. If all of a sudden you get, like, you need an IFC, like, so there's no manipulation here of any kind, like Ryan said, right? So you need a down candle, an up move, and then a reaction from this up move that fails to break the high, then take out that and come back to sell one of these points. That's what you need for order flow shift. There's no, like, that did not create this. This created that. So if you break that, oh Jesus, if you break that and come back somewhere, maybe. I hope that makes sense. All right, and then GBP and ZT. Yeah. Okay. Cool. Why can't I close this? All right. GBP. Yeah, I'll look at Bitcoin and then we're gonna call it a day after GBP and ZD. Getting thirsty. GBP and ZD, what you doing for me? Okay, yeah, I'm not sure what's going on here. What an ugly here. Yeah, eh. So weekly is still bullish. But daily is pretty bearish. $4 looks like a freaking manipulation to the top. To me. Oh, perfect. Perfect last point of liquidity reaction. Hmm. I don't like any of this. Forex is a giant scam, guys. Okay, so I can't really buy this at all right now. So to me, this is sell still. To me, this is still a sell, even though it doesn't make sense. But maybe we can sell in here. We can sell at this 95.5 if it gets there. Because I think we are inducing sellers. Now we're taking out their liquidity into the market expansion, which is here. So like try to sell out of here because we got liquidity to the bottom afterwards. But it's such a chop, and then ultimately we're gonna keep going all the way to here, taking out all of these buys. Because to me, all of this is doing is maintaining the lows and taking out the highs. So everyone's buying the dip basically. This here is an inducement, 100% inducement. So you got the range over here. So you got the range over here. So just a question of we're gonna get up to there, and it'd be a good trade. I mean, it's not that much. Here, 52, 60, kind of a lot. You can reduce it even more right there. 55, 66, 11 pips. Yeah, that's still a lot for me, but I don't trade to spare because of the spreads that are crazy. Even on a small spread broker of mine. Yeah, there's still liquidity there. Right, so right now I think we're gonna keep sucking them in, keep buying until we take out all of this, and there's a possibility. I would watch price action at this point here. I think we're still gonna be buying until we get here, and it's consistent because they're usually opposite of majors. So you know, like NZD USD is bullish, or sorry, bearish. And so this is bullish for a little bit more until we take out this liquidity, mitigate, and go. All right, that makes sense. Berkham. That's what I would be looking for if I were you. But right now you're sitting in this range. The low of the day, that's weak. The high of the day, that's even weaker. So yeah, come Great Britain, London. I'm most likely you're gonna see right now, most likely a range here. come London, you most likely will see move up and then order flow shift and down we go. Yep. See? Yeah, that's what I'm saying. Like that's another reason I don't trade it. It's like chopping around like this. Like I don't want, like, it's very hard for me to analyze this pair because we're doing this.
A little secret about Yuri, USD CHF is Yuri's favorite pair.
Yeah, exactly. Exactly. I don't trade that shit. I don't like things. I'm impatient. I'm exercising patient now that I have my window 3 hours, but I am incredibly impatient in real life. And you know, at least what they say, the volume is air for traders. So GBP and ZD is choking me. I can't do this. It just moves like this until like giant manipulation in one freaking news event, and then again nothing. But yeah, keep holding the buy at least. I would say to here. If you're already in the buy, I would hedge it here. I would definitely do a hedge here. Bitcoin, and then we're done. I haven't looked at this. Holy mother of God, we're dying. Did it really drop today till 40,000? Shit. I better panic sell my Bitcoin now.
You know, panic sell it. Yeah.
No, I'm kidding. Don't do that. Man, perfectly into my area, but it's too much. All right.
Well, yeah, I mean, we just talked about that over to the left, torched the order block, came through. Where did it come down into? Right where it's supposed to.
Right it to the
Yeah.
40,000 even almost. Oh, we're not done. We're going to be dropping, dudes.
Yeah.
Like, let's look. All right, daily. What do we have? I mean, perfect distribution here. Now this is redistribution. So yeah, I mean, and even if you thought this is bullish, here's the bottom, here's the top. Like we're not even, we're like 50%. I mean, it might retrace, just do the same kind of shit here and keep dropping. But I'm not looking to buy Bitcoin until 19,500. I'm not looking to buy Bitcoin until then. We're going to be bearish. So for whoever asked about Bitcoin, even if short term we decide to take out this high and come mitigate higher, we're bearish.
It's like the US dollar, June of 2020, like right after we had a big drop and then it consolidated a little bit, and then we dropped big, basically in September or something like that. Maybe it was June or July, summertime.
Yeah, so if you're trying to get into a sell on Bitcoin, you are trying to get into a sell, like I would watch order flow shifts. And to be honest, this starting to, like, this is what they love to do, which is when, you know, retail here, support resistance, boom, you know, came back to resistance. Then we take out the pullback, take out the break and retest, mitigate out of here and keep dropping. Or we could take out all of this. So in this case, it's actually, if you look at order flow, right? The order flow was bullish. Boom, 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 boom. Now we took out this low, right? We took out this low. We just came back here. We still didn't mitigate this. Like I said, it's your last expansion. But now the order flow is bearish for the moment. So you could do something like a diagonal line here. Don't even think of selling until we reach this line. Trend line traders. But just keep in mind that that's the extreme. That right now is the slingshot candle, as Mark says, right? Slingshot candle that broke this order flow. And it's also 47,500 level, 47,550. So look for order flow shift here. If that doesn't happen, look for an extreme higher than that, but anything can happen. I really don't think we'll come higher than this. Too strong of a push. But we could come into this last point here to 52,000 level, 52,500. But for the most, like first place, I would look here, and I would look here. If you're a Bitcoin trader, then I would look here. So, but don't even think of buying this. Watch this shit just rip tomorrow to like 70,000, and you already said don't buy. Hey, anything I can say cannot be used against me in the court of law. It's just my opinion, and I stick to it. Right, my story is sticking to it. So I think we're bearish, and we're just started having fun. Bearishness, because we got a ginormous pool of liquidity over here. This is billions of dollars. Yeah. And also look up the trader psychology graph and see what it looks like. I think it's something like this before it starts coming up. Okay. All right, guys. I enjoyed today's session almost as much as last time. Had fun. Hopefully, mindset or something that we covered today was helpful to each one of you. Let's have a good week. Don't forget bootcamp on October 9th. Reach out and have fun. Take care, guys.